Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, December 17th, and we got a bit of economic data to go over. So we'll jump right into it. We'll start off with the housing data, and the first item here on the docket would be the housing starts for the month of November. So in October, we had this is a revision higher, so it's even better than what the initial number came in for October, but it was at 1.323 million, and these are annualized units. And forecasters count for a pretty good increase to 1.356 million, and actually came in higher at 1.365. Now this came in, I think, right around 3.1%. But if you had taken the revision, it didn't do the revision was like 3.9%. So that's a pretty big increase on our housing starts here. So nice, good start. Also on the building permits, which is a good forward indicator of future housing starts, is we had in October 1.461 million. Forecasters count for a dip down to 1.435 million annualized units, and it actually increased to 1.482 million. These are on the heels of yesterday's confidence levels from the NHIB uh, Home Builders Index that came in yesterday, which was basically a high of, I think, 2007. It was almost a 12 to 20 year high that we've been seeing. So we're getting back to the days, not quite the numbers, because we were getting about 2 million, which was kind of overdone in 2007 in terms of housing starts, but we're at a much more reasonable level, and people and the home builders are feeling much more confident about where things are at. And the good thing about these is that it's the increase in the single family area, single family residences, which is the lifeblood of the housing industry. So this is the good thing that's coming up between all these housing starts here. Now, to industrial production for the month of November, we had a drop in October of 0.9%. However, increase forecast to come for 1.2% increase came pretty close, but not quite there at 1.1% for November. But however, we got capacity utilization for the month of November. So in October, it was down to 76.6, and it was calling for increase to 77.5, and it came close to a forecast, but still a bit higher than October's number at 77.3%. Last but not least, we got the JOLTS jobs reports that came out, and basically came in at 7 million for the month of September. September, and it increased to 7.3 million in October. So we're getting more jobs out there. That's why we're seeing more jobs. You know, the openings are increasing as well as more people um, creating more new jobs. So this is obviously a good sign for the economy. This is kind of really good news for what we're seeing in our economy as a whole here. So let's jump over to headline news. Stocks are up as a result. It's kind of taking a little bit of a breather. It's not up as much as you would think with all this great data we're seeing here. Probably because the motion of the China trade deal, and then of course you had the UK election, which kind of set off yesterday's numbers, and we were kind of up. We did close up, but not off the highs. We were a dollar at one point. I remember seeing at least 150, and it closed at 100. And same thing with bonds, as you'll see, the bonds were down further, and they closed up a little bit from where they off its previous lows. But in any case, it's kind of slowing down a little bit. You're getting to the holidays here, and I think they're kind of getting tired of the ups and downs of the market here. So you may see some twitches here and there, but I think it may slow down a little bit, just because we're still looking for more details on that Chinese trade deal. Some of the good things that they're saying is that they'll increase their overall goods from the U.S., including agricultural. They're going to protect U.S. intellectual property. And then also there's supposed to be keeping in checks of regards to currency manipulation. So that was all part of the phase one. Of course, they're going to be starting phase two at some point here in the near future. But as of right now, this will hopefully be signed in January at some point, that trade deal. To move forward here, we'll take a look at the bond market, and here's the bond market. We're currently only up about 2 basis points. We've been kind of going up and down a little bit here, but we're still below that level here. So I would say there's no change in pricing, but as I was indicating yesterday, we're way down here in for our low. Uh, but we end up closing down about 19, I think it was 17 or 19 basis points versus at one point it reached even almost negative 30 basis points. So we're off from the low. So as the stock market came off its highs, we came off our lows on the bond market here. So right now there's no change of pricing in terms of mortgage-backed securities or mortgage rates. Uh, Here's the yields. We're down a little bit, but we're at about 2.88. I'm sorry, 1.88 right now on the 10-year. So that's pretty much the wrap for the day. So mortgage rates are unchanged from yesterday. And if you guys are in California looking to buy or refinance, I'd love to hear from you guys. I'm a mortgage planner with Pinnacle Home Loans, and the best way to reach me is to direct message me or my email. Email is probably the fastest response. And again, we got loan programs for you, and I would love to be able to talk to you about them. You guys have a great rest of your day. We'll look forward to see you guys tomorrow. Thanks for watching. Bye-bye.